about the rupee. What does the rupee weakening to all-time lows actually mean? So let's first start by telling you what's happened today. The rupee has weakened further versus the dollar, hitting an all-time low of 77.50 and closing just shy of that mark. The key factor in the recent weakness is the surge of the US dollar after the Federal Reserve's 50 basis point hike in interest rates and its stated intention to reduce the size of its balance sheet. There's also been tremendous selling by foreign institutional investors in Indian capital markets. The fall took a political turn with Rahul Gandhi criticizing the Prime Minister. The Congress leader saying a falling rupee can be good for exports provided the PM focuses on the economy. So what does it really mean? Why are we seeing this kind of a hit on the rupee? How long could it last and how sharp could subsequent falls be? Madhvi Arora, lead economist at MK Global, is joining us on the show. I'm speaking with Maithili Bhusramat, consulting editor ET Now, and Ajay Sahai, Director General and CEO of FIO, is also with us on the show. Welcome to all of you and thank you so much for joining us today. Madhvi, let me begin by just getting your basic understanding, because a weak rupee, does it mean it's reflective of a weakening Indian economy?
To some extent, see, it basically a confluence of a lot of factors. I don't think what is happening at this point in time could be really attributed to what is happening in India per se. It's a global phenomena that you're seeing, wherein dollar has strengthened against most major G10 economy currencies as well as emerging economies. Of course, the interest rate differentials are not auguring well, and generally, whenever there is financial tightening that happens in the world, hot money flows back from emerging markets to developed markets, and especially developed markets which are growing. And US still, despite the uncertainty that we're seeing around the world, seems to be the only space to hide at this point in time. And that is what is happening across emerging markets, where you're seeing this mayhem. Rupee actually held up pretty well in the month of April, where we saw CNH, Chinese yuan, falling dramatically because of the growth concerns. But rupee actually held up pretty well, partly on account of the fact that, you were seeing agriculture commodities doing well, as well as, the metals and other commodities which India imports actually falling. That actually augured well for the rupee. But I think there's a bit of catch-up that is happening in the month of May, especially last 2-3 days. We have seen rupee worsening much sharper than its Asian peers. And I think to some extent, it's largely a global phenomena which is playing out in India, playing a catch-up rather than being a domestic-driven story. Because clearly, the RBI also has, done a catch-up as far as policy reaction function is concerned. So I think to some extent, it's basically a catch-up of INR vis-a-vis emerging peers or emerging Asians rather, which it did not really see in the month of April.
So, Maithili, give us some more perspective on this. Obviously, other Asian currencies have also been hit. The yuan is, the lowest in 18 months. And there are some very basic fundamental factors which will impact India, right? Like the high crude prices, the level of exports, trade deficit, FII selling, etc. Is there anything that can be done to mitigate this impact? And what is the role you now see the central bank playing?
Well, I agree with almost everything that Madhvi said, except add one more thing, that what has happened in the Indian context, and which makes us a little bit more vulnerable than other Asian economies, is the fact that we import almost 80% of our crude, and crude prices are not coming down at all. So that is putting pressure on our current account deficit. And that clearly is a sign of an economy which is not doing particularly well on the external front. So that makes people more nervous, which is why the rupee is perhaps likely to depreciate even more in the coming days. And remember, as per the RBI's own calculations, almost every 5% depreciation in the rupee adds about 10 to 15% basis points to the inflation. So given the fact that inflation is already very high, and that the RBI has been a little late, not a little late, I would say quite late, in fact, to play catch up as far as raising interest rates to tackle inflation is concerned, going forward, the outlook is not too good for the Indian rupee. It is going to weaken. How much it's going to weaken is difficult to say, but as I said, as compared to the other emerging Asian economies, the fact is that our dependence on crude imports and high price of food puts us in a more vulnerable position as compared to others. There's nothing much the Reserve Bank can really do except ensure that the spikes are not as sharp as they were on Friday when the rupee depreciated by about 57 paise, today again a little over 50 paise. They can only try and smoothen the decline. And fortunately for us, we have forex reserves. So the reserves have also fallen now to little less than 600 billion. So as of now, there's no need to hit the panic button, but there's certainly need for us to be concerned particularly because we have been behind the curve as far as inflation is concerned, and there is a global risk-off phenomenon.
Mr. Sahai, let's speak about this in real terms. And we've been showing these information pointers on our screen as well of what it means to different constituencies. So for students who want to study abroad or are studying abroad, it's tough. Your, income in rupee or your parents' income in rupee will go a shorter way towards your payments. If you're an NRI, then, well, good times for you. But from the trade perspective, how do you see this panning out, Mr. Sahai? Is that advantage to exporters still very much there at such high prices?
Let me put it into perspective. Please bear in mind that over a period of time, dollar invoicing has come down. So today, dollar account for roughly 60% of India's exports. So whenever we are talking about the dollar value vis-a-vis rupee, we are talking about the 60%. And a lot of exporters today are hedging their risk also. It is not the case 5 years down the line when people were not hedging the risk. A significant amount of exporters are hedging the risk. Now with that, if I'm looking into some segment of exports, which have high import intensity, for example, petroleum, gems and jewelry, electronics, for these sectors, we are not seeing much impact. But of course, for traditional export, which have very less import intensity, definitely since their import value is not going up and to that extent their export values are, they are definitely benefited, and particularly from that aspect, it should support export. But I always believe that when you are looking into the currency, look into who are your competitors and how their currencies are now moving. So to that extent, if I'm talking about the recent phenomena from Ukraine war onwards, of course, rupee is one of the weakest currency in Asia, and therefore helping from competition from China or from Thailand or Malaysia or from South Korea, we are definitely benefited. But when you are talking about the currencies in many of the Latin American countries or African countries, we are not actually benefited. So I will say that while the general perception is that all segments of exports are benefited, I think it's a wrong notion. Few segments are benefited. And point is that these kinds of volatility is not good for exports. We would always prefer if the currency moves into certain band of plus minus 5%, you can take a call, you can take a position, you can negotiate, you can finalize your order. But high volatility in currency is not good for exports also.
Yeah. What about on the import side, Mr. Sahai? And here where it gets tricky, because it's not just direct imports, it's also products manufactured in India which import a lot of their components. So say in electronics, consumer durables, auto sector as well, you have a fairly significant amount of imports. How do you think?
I entirely agree with you when we are
what is going to be the impact of
imports that? No, definitely import will become costlier, depend on what is the component of import in your end product, and to that extent, the end product price in domestic markets will go up. If you are talking about gems and jewelry, gold is imported, gold price in any case are now moving up, and with the exchange, it will go further up. The customs duty, which is on the landed value when it is converted for an exchange to Indian rupee, that will also go up. So on a thumb rule, most of the sector where imports are happening, the price will go up, and this will definitely impact the consumer.
Yeah. Maithili, explain to us what happens from here on. I mean, there's some estimates which talk about the rupee falling as much as 79 to a dollar. How does that impact us overall as a nation, apart from the categories of people that we've spoken about, your students, your travelers, etc.?
Well, it's very difficult to say where exactly the rupee will settle, but I do feel that the RBI will intervene if it starts falling very rapidly. So the whole attempt of the RBI would be to kind of, reduce the volatility. How does it impact us? I think the biggest impact really of that would be on inflation. At a time when inflation is already very high, we saw the figures of March of 6.95%, 7%. Month of April, inflation is supposed to be expected to touch close to 7.5%. At a time when inflation is already so high, any further depreciation of the rupee is going to hit us primarily through the inflation route. And that's going to be catastrophic for a country where we have such a significant portion of the population, in terms of numbers at least, below the poverty line. So this, I think, is my biggest worry, is that particularly if you have inflation at this level, then the RBI's attempt, in the past, they really could not do very much. They were behind the curve. and as a result of which you have an inflation interest differential between the US and India, which now, because the RBI has raised interest rates to some extent, that interest differential will have been bridged. But even so, the differential remains wide because the Fed is expected to raise interest rates further at its forthcoming meetings. So the biggest impact really will be on inflation and in terms of human welfare.
Madhvi, your estimates of how much more the rupee could weaken, and what are the kind of interventions which could come now, or what will be required?
I think I'll refrain from giving any levels. What is understood here is that the direction is clearly on a weaker trend per se. I think generally on a seasonality basis, also historically, May month has not been pretty healthy for the rupee. Doesn't really augur well. If you see last 10 years, rupee has on an average depreciated more than 1.5% in the month of May. So I think I would refrain from levels per se, but as others have also been mentioning, that the pressure on the currency is clearly on on the upside, given the current account dynamics that we are facing, and even the capital account pressure that we may face in the coming months or so. So I think, but that said, I think RBI will be pretty cognizant that any kind of depreciation that rupee faces should be managed well. There were, sources which had mentioned today in media as well that RBI had intervened massively today in both, spot and NDF market to ensure that the rupee depreciation happens in a much more, stable fashion. So I think the volatility is what they would generally focus on, not the direction per se. I think it doesn't really help the currency as such if it tries to break away from the path of other emerging nations, because in the end you are competing with your trade, the trade partners as far as your export competitive is concerned. So I don't think it makes sense for them to change the course of the rupee. But definitely, very sharp volatility doesn't help either importers or exporters per se. So I think that the Reserve Bank would try to contain in the medium term. But I think levels is anybody's guess.
That's somewhere where no one really wants to wade in at that point. People are talking about 79, even 80, but we'll wait and see. Maithili, I want to understand on a very basic level, because the rupee, like I mentioned earlier, sometimes becomes a political issue, it becomes an emotive issue. For some reason, the rupee is seen as a symbol of the Indian economy's strength. Can anything be done seriously to intervene if a lot of the factors are global?
Well, as I said, the RBI, luckily we have the kind of forex kitty which we didn't have in the past. It was over 600 billion. Now it has come to just little short of 600 billion. So we have the forex reserves. But whether it makes sense to intervene and try to prevent an underlying trend is a big question mark. So normally the Reserve Bank and no central bank intervenes against the market. What they do try to do is ensure that the volatility is reduced. So to that extent, the RBI has been intervening. Remember, fortunately for the RBI, the intervention, every time the RBI supplies dollars, it buys up rupees. So fortunately, this comes at a time when the RBI is consciously trying to tighten monetary policy also. So for that, there is no conflict. But the biggest worry, as I said, is not just in terms of volatility, and that's not doing good for either exporters or importers. The bigger worry really is that what it does for inflation. When the rupee depreciates, given the fact that we import such a large volume of our oil, that means it will impact the price that we pay for our oil. And because oil is a very crucial input for almost anything, whether it is direct as well as indirect through the transport route, we are going to see the impact of that on inflation. And that is never very good news, because ultimately inflation will start hitting not just our export competitiveness, but also our growth potential. And that is a bigger worry. So a sharply falling rupee, depreciating rupee, out of control completely is not good news at all.
Yep. Just last comment from you, Mr. Sahai. What would you like to see? What would exporters and importers like to see at this point, which will aid?
In fact, as everyone is saying, that we are, of course, a market-driven economy. We want our exchange rate to be determined by the market forces. All that we want, that there should not be huge volatility in the currency, because once there is huge volatility, you cannot decide, you cannot negotiate the order. When you are pushing any exporter, you are taking a second thought of that. So if rupee moves within a reasonable band, we are all very happy with the rupee. And of course, from the exporting perspective alone, we would like rupee to reach near its real effective exchange rate.
Yep. We'll watch this space closely as the rupee hits over 77 to the dollar, and how steep the fall will be. A lot of these factors not in our control. A lot of Asian currencies today have been hit quite badly, and part of it is because of the strengthening dollar, higher demand for the greenback. Thank you so much, Maithili. Thank you so much, Madhvi and Dr. Sahai, for joining us today on the big discussion and the lead story. So the other